When you're buying a home, typically your lender will escrow your taxes and your insurance. That means that every month they'll collect a 12th of the cost of your taxes and insurance.
Welcome to the RE Real Estate Podcast, where we discuss buying and selling real estate in black and white. Here are your hosts, Ben Harang and Clint Galliano.
Welcome to another episode of the RE Real Estate Podcast. I'm one of the hosts, Clint Galliano, and the other host, Ben Harang. How you doing, Ben?
Clint, good afternoon, man. I'm doing terrific. How you doing?
I'm doing wonderful. It's our normal Wednesday time slot, and we chugging along.
Yes, we are. Yes, we are. We're going to continue the mini series, I guess, of buying versus renting. Previous episode, we talked about the benefits of buying, comparing buying versus renting. We obviously think buying is better than renting, but financially, we both think buying is better than renting. Today, we're going to take a deep dive into the true cost of home ownership in Lafourche and Terrebonne parishes, in particular, Thibodeau and Houma. We're 12 miles apart. Like I like to say this, the wonders of technology. Clint's sitting in his office in Houma. I'm sitting in my office in Thibodaux. And the wonders of technology bring us together. So we're only 12 miles apart, but they're completely different real estate markets at the moment. So we're going to talk about some of the pros and cons and why Thibodaux's in a little bubble, why Houma is more of a buyer's market at the moment, and we'll take it from there. So the median sales price, we talked about the two towns, two different stories, is declining in Houma by 6.4% year over year. Was down 6.4% to 13.4% year over year. One of those websites shows a 6.6 drop in the last year. One report lists Houma in the top 5 cities for the projected price declines.
Yeah, I saw that.
We don't like to see that, but it does present some opportunities. One of the things about Houma is the new flood maps and risk rating 2.0. If you get into Houma and you decide that's what you want to do, one thing to look out for is the flood zone. If you're in a flood zone X and you're not required to buy flood insurance, it's a lot more competitive for that property. If you're in a flood zone, then you need to talk about the cost of flood insurance. You'll need to have a policy on that property as long as you have a government-backed home loan. So that's one thing. One thing you can do to pick out a property in Houma, if that's where you want to be, is look at the flood zone and try to. It's not always possible, but try to stay in an X zone if the right house works for you. That'll save you a ton of money on flood insurance.
Yeah, not everything is in a insurance required flood zone. Met with a new client yesterday for a consultation, and they told me that they liked this one property, and they said the street it was on, and I said, I can almost guarantee that that's going to require flood insurance.
Mm-hmm.
And I looked at the flood maps, and it and its two neighbors are in flood zone X. It's like this one little pocket where X dips down, and everything else around it is flood zone A or AE. And it's like this one little pocket doesn't require flood insurance.
Right. Before the flood maps, and you can correct me if I'm wrong, Broadmoor subdivision in Houma was a hot subdivision. They updated the flood maps, and it's like, whoa, pump the brakes. Almost everything in that subdivision is now in a flood zone that requires flood insurance. And it has affected or impacted the prices in Broadmoor subdivision.
Yeah, it's almost like Alma Street is kind of the dividing line, but it's not the definitive line,
Right.
Because they've got fingers of flood zone AE that go closer towards the bay or towards Park Avenue, and they've got some fingers of flood zone X that go back past Alma, you know,
Right.
so it does this number, you know, which makes sense.
And that's why I was saying if you can make that a high priority. Don't discount it because it's in a flood zone that requires flood insurance. But make an informed decision. Do not proceed with a purchase on a house that you do not know what flood zone it's in. You need to go into that with your eyes wide open, and so there's no surprises between the purchase agreement and the closing. So that's from the school of hard knocks, and me seeing it happen to people, and it's not fun for anybody when that happens. Most people are like me. I just don't like surprises. Give me the news, whether it's good or bad. Just give it to me, and I'll process it and deal with it. Just don't hide it and then pop up one day and tell me something you've been knowing about for 2 weeks, and you just now decided to tell me.
Yeah. So getting back to the inventory and Homa and everything, that like you said, there's opportunities for
Mm-hmm.
people that want to buy, uh, and just be prudent about your approach to it. Moving on to Thibodeau. Thibodeau is price. Websites show that there's a slight decline in prices in Thibodeau, and I think that tracks with what we're seeing in our market reports as far as the market price, median market price. But ultimately, the inventory is a lot lower in Thibodeau,
Mm-hmm.
and I guess it's a lot less people want to sell. There's a lot more people in Homa wanting to sell. And it probably ties back into our diatribe about flood insurance, piled on with any remaining damage from Hurricane Ida and all of that stuff. But it's also Thibodeau is a smaller market than
Right.
Homa, like we've said before. So I think all of that plays into it.
And Thibodeau is it's amazing if it's priced right, it flies off the market. In Homa, even in the flood zones that do not require a flood policy, it takes a little bit longer. And just because the median price is down, it doesn't mean every house is down. It just means the house in the middle is down 2.6% or whatever it is, 2.3%. There's as many price lower than that house as they are higher than that house. So maybe the higher end houses are not selling, or we might have not sold one high end house that month. So that the market is really so small that one or two sales does affect it overall. Homa's market is bigger and deeper, but there are people in Homa that never didn't have flood insurance, are now required to buy flood insurance and now can't afford their house just over the flood insurance. Some people refer to the flood insurance premium as your second mortgage on the house that'll live with you into perpetuity.
Yeah.
So you just need to understand what you're getting yourself into on the front end and not be surprised. And I'm not saying don't do it. Some people say I can afford it. I want to live there. I don't think the house is going to flood anyway. I think the maps are wrong. I'm willing to pay the premium. Go for it. Don't not buy it because of that. But make sure you make an informed decision when you do buy it.
Yeah. So moving on to the rental market, Homa's rent is average rent for a one bedroom is about 950. And so we say that I can remember, you know, 20 years ago, you could rent a one bedroom, or at least around Thibodeau, well, probably anywhere for like $200-300 a month,
Mm-hmm. Mm-hmm.
400 for a really, really nice one. And but the key thing is that it's up almost 2% year over year. So that's not too bad. That's less than the typical 3% increase in rent. Uh, but then you compare that to Thibodeau, and that's $1,232 per month, and that's up 6.6%. Now I don't know if that ties into, I think that's probably including apartment rents.
Mm-hmm.
It's just, I don't think that's got like single family house rents in
Right.
there, but still, it's eye opening.
And again, what what that tells me is that the rents are going up to pay the landlord's cost of insurance. So the fact that you're not buying a house because of the cost of insurance, you're still paying for the cost of insurance by renting an apartment or a house in Houma, in Thibodaux, wherever it is. If you the flood zone also plays a part in the rental, because if it's in a flood zone, then the landlord, in all likelihood, will be required to buy flood insurance. And if you can imagine what a flood premium policy, what a flood policy would cost in a 50, 7,500 unit complex, and everybody in that complex is paying a portion of that premium. So you can't run away from it if you're going to live here. And I'd rather live here and not have a landlord to call than to live here and have to depend on somebody else to make repairs, pay somebody else's mortgage for them, like we talked about in the last episode. I'd rather pay on my mortgage, and at some point in the future, it's paid for. And one day you wake up and you don't have another note to pay. 30 years is a long time, but it sure goes by in a hurry.
That's true. So, and that ties into, and getting to cost of ownership,
Mm-hmm.
the hidden giant.
Yeah.
And it's kind of what we've been talking about this whole episode, is that you've got all these ancillary costs involved.
Mm-hmm.
And even if you're not buying a home or don't own a home, you're still paying these costs. It's just reflected in your rent.
Right.
But when we talked in our other episode about when buying a home, $1,000 a year insurance assumption, that was assuming a new construction home
Mm-hmm.
in a Thibodaux subdivision. So a fairly small home, but still a nice 3-bedroom, 2-bath, brand new home. And actually, I got quotes in for a home because the client that caused this whole exercise actually wound up writing a contract on a new construction home. So he looked at the comparisons, and his his note is going to be really low, much less than what he's paying on his rent.
Mm-hmm.
And so he decided to move forward. He fell in love with the house. We got insurance quotes in this morning, and it's like $1,350 to $1,485 a year.
Yeah.
For that house.
And
that's amazing.
It's probably not in a flood zone that requires a flood policy.
Correct.
And then new construction, the homeowner premium will be as cheap as it ever gets. So it'll bump up over time, but to get started, it's on the very low end of the spectrum, and you can get in the house, have some breathing room, and just kind of grow a little older as the premium goes up.
Now, in comparison, if you're not looking at new construction and you're looking at a resale, then you're looking at much higher insurance costs just for homeowners, even disregarding if you have to have flood insurance or not.
Mm-hmm. Mm-hmm.
A different client looking in a different area. This is a 1.5-story house, and we've got insurance quotes, homeowners insurance quotes from $3,200 to $9,800 a year, depending on if you're going with just bare bones dwelling coverage or if you're going with full replacement coverage. It's like replacement coverage value is like $650,000, and this is on a $165,000 listing.
Well, and also the zip code matters. We had somebody a month or so ago at a team meeting talked about, and he couldn't write in 70364, which is on the West Main side of Bayou Terrebonne, but he could write in 703.
No, 60. And
64
he can write. Yeah.
Vice versa. So he couldn't write in 60, but he could write in 64, and literally Bayou Terrebonne runs between those two. And that's the only difference. So it makes no sense, but those arbitrary lines, if you're not paying attention, mean a lot. And that's some of the ways that you can get the price down in home ownership generally in Terrebonne Parish, and to a lesser extent in Lafourche Parish.
Yeah. And just a reminder, homeowners insurance doesn't cover flooding or flood insurance. We've we've said it, I don't know how many times about the different policies. But that's a kind of a key thing to remember. And risk rating 2.0 is ultimately is just ridiculous. They're trying to make this, what do they call it? It's basically a, how did the guy refer to it? It's a, I
I'm
can't think
drawing
of
a
the term.
blank.
Basically, it's a program to provide relief to people so that if they ever do happen to flood, that they've got some, it's a subsidy, really, is what it is. But they're trying to make it act as a commercial insurance program,
Right.
as opposed
Right.
to continuing to be a subsidy.
And you've probably heard me talk about this if you've seen the episode when we talked about flood insurance. One of the problems with it is FEMA has decided each state needs to stand on its own. So Louisiana has to generate enough premiums to cover the losses. Well, that makes it cost prohibitive. And what they've done is there were a lot of policies in Louisiana that people had that were not in a flood zone that required a flood policy. Well, they have successfully running virtually all of those off. So they went up on the price, and the premium did nothing but stay the same or go down. So they have fewer policyholders. The ones they have are at a somewhat higher risk, according to FEMA. So there's no law of large numbers, which is insurance is based on, to collect the premium from the people that probably won't flood, to offset the losses by the people that will flood. So it's a vicious cycle, and it becomes more and more out of line. But in Louisiana, we have like a 95 or 98% compliance rate when a flood policy is required. Nationwide is plus or minus 50%. So in Iowa, they say, we're not going to flood. We're not going to worry about that. And they don't buy the flood insurance.
And the
And
lenders don't force them to.
right, because the penalty is insignificant. So if they get caught, they pay the penalty. So in my mind, that's having a system set up for people to abuse it and get around it with a wink and a nod, because everybody knows what's going on. And that would be the solution to the flood insurance problem, I think.
Yeah, make it a
So
national pool.
exactly, do it nationwide rather than by state. Because how can we do it with 4 million people and California does it with what, 30
Right.
million, 50 million people? Of course they can do it. We can't do it with 10% of that.
Exactly. Right.
Anyway, I'm off my soapbox. I just
All
stepped
right.
off.
So another thing that's changed recently is hurricane deductibles.
Mm-hmm.
A lot of times you're looking at a 2% to 5% of the home's insured value as a deductible, but we're starting to see some policies quoted with higher deductibles. And changes since Hurricane Ida is basically that we call it a hurricane deductible, but it's really the wind and hail deductible. It's almost the cost of replacing your roof.
Right. They virtually took the coverage for your roof out of the policy. In a hurricane, in a hailstorm, or a typical thunderstorm, if you have roof damage, you go back to your standard deductible. But a named storm deductible virtually takes out coverage for the roof. And you can now buy a stated value policy, which should lower the premium a little bit. You can also,
I think they said that was going to be coming out in January.
So they also are changing the way they cover a roof after a relatively short time. Once the roof is new, then they start prorating what they'll pay you for the roof over the life of the roof. So if it's a 20-year roof and it's 10 years old, they're going to pay you half of the roof after they hit you for the deductible. So it doesn't make sense that you're buying something and the biggest exposure you have is the roof. Because if the roof stays solid, you're not going to have a whole lot of hurricane damage. It's when the roof lets go, everything else is caused. So anyway, I feel like we running people off, but we want to be truthful about the true cost of home ownership in South Louisiana.
Yeah. And so the other thing too that we wanted to touch on is kind of your true monthly cost for buying versus renting. So, Ben said a couple of times here, this episode and the previous one, that, you're still paying for your repairs. It's just that your landlord takes care of it. You're paying it in your rent.
Mm-hmm.
When you're buying a home, typically, unless you put a whole bunch of money down, your lender will escrow your taxes and your insurance. And basically, that means that they'll collect a twelfth of, after your initial purchase, every month they'll collect a twelfth of the cost or estimated cost of your taxes and insurance, and collect that along with your monthly note, and put that portion for taxes and insurance into an account and save it until the bill's due, so that they've got the money. They handle taking care of paying it to make sure that it gets paid. So if anything does happen, they don't have to worry about no insurance or the house being sold at a tax sale. So you might get a quote from a lender at, saying, okay, well, your payments or your note's going to be, $900, $1,200. And
Mm-hmm.
then they may or may not be taking into account typical insurance numbers, or they may not be taking into account. That may just be your principal and interest. And that's one of the things that at least I like to do is I'll get the insurance estimates, give that to the loan officer, and let them work up the closing estimates
Mm-hmm.
using those actual quotes, so that they've got a better understanding of what that total will be. And then we've got, I guess, a much better base to start out from for making offers and deciding on if they won't even want to make an offer on a home.
Right. You're starting from a position of strength through knowledge.
Right.
You're much more informed, and anytime you're informed, you can make a better decision on your behalf. So, some people just say, I want to buy that house because it's cute. And there's a saying in the real estate world, cute little houses sell. It's all about curb appeal. And then reality sets in with the cost of a homeowner's policy, with the cost of flood insurance if it's required, what's covered under the homeowner's policy that you do buy, because we're in a 6 to 6.5% interest rate world now that affects everybody nationwide. It's the insurance cost that affects us disproportionately than people on the interior of the country.
Yeah. I mean, when Pennsylvania can get insurance for $700 or $800 a year, and we've got people paying, you know, $4,000 to $8,000 a year on
But to say
average.
7,000, 8,000, that's reflected in the cost of the houses. I'm sure Pennsylvania's median price is not $223,000, somewhere north of that significantly. But Pennsylvania still floods. New Jersey took the Superstorm Sandy, if you remember, was a nor'easter that went up the East Coast and wreaked havoc on the New Jersey shore. Nobody had flood insurance. So FEMA came in and gave away money. We don't have flood insurance down here. They said, why don't you have it? You're supposed to have it. And they harass people and don't help people. So anyway, I told you I get off my soapbox. Flood insurance and I don't get along. If you hadn't noticed.
Yeah. The feeling's mutual. So, I mean, ultimately, with everything we've discussing, if somebody's not wanting to take responsibility or take control, you can see why somebody would want to rent more than just for a year or two if they don't want to deal with that kind of stuff. But again, like we said on the last episode, if that's what floats your boat, go ahead.
Mm-hmm.
Ultimately, you've got better control and more control when you own your home.
And some people just don't want to deal with having to fix stuff themselves. They rather have 1-800-landlord call them up and say, your fridge went out. I'm going on a road trip. It's going to be fixed when I get back. And they hang up the phone. And that's all they do. So, and the landlord may or may not fix the refrigerator or whatever it is that's broken. But you're dependent on him if you're renting, him or her. So, all right. I think we beat that horse enough, huh, Clint?
Yeah, it's got stick marks all over the place.
Yeah.
All right. I think we got another one in the can here.
All right. We enjoyed it, man. It's some good stuff.
Yes, indeed. So remember to like, share, comment, send it to your friends, subscribe, all the things. And we do that at where?
At realestatepodcast.com and send it to your mama and them. Send it to
realestatepodcast.com. All right.
All right. Okay. I'm done, Clint. Have a good one.
All right. You too. Bye-bye.
While we may discuss topics such as lending, interest rates, title law, real estate law, and appraisals in addition to real estate sales and transactions, please remember that we are only trained and licensed as real estate salespeople in Louisiana. The information shared on this podcast is for general purposes only and should not be taken as legal or financial advice. We may be agents, but unless we have signed paperwork stating otherwise, we are not your agents.